Hi all, today's session will be a little bit more technical. If you're into facts and figures, I believe you will gain some more insights about the market after this session. So I'll be looking at the price and volume trend in the last 20 years, analyzing it and importantly forecasting what will happen to this year and the following years. Okay, this chart over here, you see that it represents the new sales for the last 20 odd years since 2001. Okay, why did I use the new sales figure firstly? It's because as compared to the resale market, I would say the new sale, it's always the primary leading market where developer, when they sell units, it's just a cost of business. It's very focused, it's very controlled environment whereby it's objective and they have to react fast and sensibly to the market, as compared to the resale market whereby there's so many more variables that owners like ourselves consider, whether it's for schools, staying with parents, needing more space, upgrading. Even if you see on the resale market, all the new price record is actually a result of what happened maybe in the nearby new launches whereby new price benchmarks have been set. All right, so that's the reason for using this new sales chart. But I also compare the new sales with the total sales if you're wondering, and they do share almost 100% similarities in the trend later, which I will explain to you. If you're looking at this chart right now, quickly, just to let you understand, nothing too fanciful and I don't want to complicate things. So this is the total market representing the entire all the different districts in Singapore, but they're all the new launches, they are the new sales. The bar chart shows the annual volume that have been sold, okay, and then the line is the per square foot pricing. Okay, this is something interesting. That's why I look at it deeper and sharing with you right now. If you see from 2021 to 2023, which I have plotted up in red, there are 3 consecutive years in a drop in volume. And even last year, it's way below the average annual sale of 10,800 units, the dotted line, horizontal dotted line across. Okay, so it is very interesting. It is very rare. So we are going to look at it, analyze it, and see what would happen this year and the following years. Okay, so take the 2024 figure as a pinch of salt because they are obviously we are not at the end of the year, but there are figures coming in from the first quarter. Firstly, to note, it's when you look at it in totality, there is no 4 years of consecutive drop in volume. So 3 years consecutive drop, it's already the maximum. Let's take a look at the other periods whereby there are consecutive drops in the volume in the next chart over here. All right, you'll see actually that there are 4 other periods in the last 20 years. Okay, 2 of which there are 2 consecutive drops in the volume. And then the other 2 later years from 2012 to 2014, that is the 3 years of drop in volume. That's in red also. And you see one in orange border in 2017 to 2019. Okay, why is it in orange? Is because the volumes in the 18 to 19 period is almost similar. But I do consider it a 3 years drop because when I compare to the total sales, that means including the resale volumes, there is a distinct drop from 2018 to 2019 volume. So take it as there are 2 periods of 3 years of consecutive drop in the total sales volume. So with that, let's take a deeper look into it. You can see in the chart, I added the 2 arrows at 2015 and 2020. All right, these are the 2 years whereby it followed the 3rd consecutive drop in volumes in 2014 and 2019 respectively. You realize immediately that the volumes increase after that 3rd year. All right, so that is one main thing to observe when we look at these past trends. And when the volume increase, you realize at the top where the line chart, where the pricing per square foot is, the pricing, there is some form of moderation from the red little arrows. Okay, so I'm just taking it a little bit slow over here for you to digest what I've just said. The 4th year after following the 3rd consecutive year of drop in volumes, the 4th year volume went up, the price went down, or there's some stagnation or moderation that you see in 2015 and in 2020. Following which, price, of course, went up, as you can see in the green arrows and the line that went up eventually. So this is something interesting because it seems like it mimics the current situation right now, whereby there are 3 years of consecutive drop in volume since 2021 to 2023. And right now, I think it's a good thing that we are doing these sharings because we got some Q1 data in. You see that the price, there's some moderation. And if you look at the volumes right now, I don't know if that reflects the total Q1 total volume at 1,700 plus. If you just extrapolate it to 4 quarters, it will be 7,000 units, which would be above 2023. So there's some form of resemblance already over here. Okay, which is a good thing because it does paint a certain picture to show that maybe we are at a certain turning point in the market. Okay, so what we understand from this quick analysis is that you realize in general there is no direct correlation between pricing, the volume and the price, right? You see generally when the volumes drop in the last 10 years at least, you know, the price also went up. But, okay, volume trend changing from down to up, which I've explained in this last 2 examples, does show some positive correlation to price movement upwards in the following year. Okay, I repeat now, volume trend changing from down to up does show some positive correlation to price movement upwards in the following year. Okay, so this is something interesting. So if I were to put it together to explain is what is happening on the ground, with what the charts are showing you that I've explained, you realize there's a lot of similarities. Okay, in general, the market is very resilient. If you haven't really understand the Singapore real estate market, it's very resilient. It comes with a lot of sound policies to ensure a stable market, whether you talk about the cooling measures that comes with ABSD that tames a hot, booming market. You also look at the financing measures that make sure that every purchaser must be able to afford at a very high stress test level. Whether you talk about a high down payment, a low loan to ratio value, this actually help to build a very healthy market in such a situation whereby there is some uncertainty. You know that the buyers, the owners can really hold the property well. So since 2013 until now, this has been holding true. All right, this entire story has been holding true. So right now, even if you see in the past year, there was some economic uncertainty. Economics were predicting recessions happening here and there. I mean, which happened in certain areas, not so much for Singapore, which economics is still very strong, but definitely we went through a period of very high interest rates, whereby rates went up to 4-point-something%. Right, but even then, I mean, coming into second quarter this year, the market is still relatively strong. Sellers, there's no real need to sell low. So what happened now is there's this tug of war between the sellers and buyers. Sellers don't need to sell low, they're still pricing it high. You see crazy record prices, crazy asking prices. I just saw one $2 million for HDB at the Toa Payoh or Bishan area. Right, but at the same time, buyers are coming to a point whereby they feel that the latest price increase, I mean, since 2020 after COVID, is unsustainable, which is true. All right, that's the reason why you're seeing this first quarter price moderation, which is happening right now. Okay, so what will actually take place moving forward? If you see using this chart as an example to forecast, you'll see them meeting somewhere in the middle, and then for the entire market to move along after that. All right, so we may be at this turning point in time. Okay, so what does it mean for you over here? It's firstly, I just want to have a disclaimer out there that real estate is really not a speculative product. Okay, as much as I'm analyzing all these trends to make certain predictions and forecasting, it's never meant to be a buy and sell signal. Okay, you must first understand that real estate as an asset class is non-speculative. It forms a strong foundation for your net worth while you're building towards your retirement, right? It's not something that you can time the market accurately, especially with the current, a market that it's just very stable. It's not as volatile as other countries' real estate market. Okay, so time in the market, again, I know this is very cliche, but it is true, right? Time in the market is still the most important factor for profitability. All right, age is something that's irreversible. Loan, it's dependent on age. So if you miss your 20s, 30s, you can't turn back time. All right, it also means that you just need to have put down more cash. So by analyzing this, again, it's not a prediction, but importantly, when we look at all these things, it's how it aligns with our current situation and allow us to make very sound, resolute, and intelligent decision for our own property portfolio. Okay, just for example, in the last 1-2 years when the market was going up very sharply, I mean, it's okay to be upgrading because you're only changing from one property to another. You're not speculating for another second property. But to say to buy a second property outright with very, very high interest rates, well, it's definitely not in my top recommendation to my own clients. But as the market changes right now, you'll see that opportunity for a second property, if you are in the process of decoupling or if you have decoupled and just own one, I mean, it may be a good time to look at opportunities, especially in the second half of this year when there's more supply coming up. Because developers, like I say, in the course of business, when they are looking at the market situation, they might not be so aggressive in pricing their units. Their profit margins might be thinner. And if you can see in some of the land purchases in the last year or in 2022, some land were bought, bought in a more favorable pricing, even with bearing in mind the harmonization of the GFA. So you get some opportunities down the road, I would say in the second half of this year and possibly in the first half of next year. Right, though, for example, even we have it already right now. I mean, just to share, like W residences that came down 40%. I think the last video I shared quite a bit about that. More than 65 units have been sold. The first phase owners have already benefited in a way with some paper profit. And then Lentor Mansion is an example whereby it's a good normal launch that could have been sold by Guaco Land at a much higher pricing. But they priced it right, they done the product right, and it's been well accepted by the market. So do look out for such products, but also everything's case by case basis. Analyze your situation, put it all together, look at the different priorities and see which are more important to you, and then make a very sound and resolute decision. If you need help, of course, do reach out to me. And with that, I thank you for attention, and I'll see you in my next video.